On April 28, 2026, millions of Canadian seniors will see money land in their bank accounts. But here is what most of them do not know. That deposit is higher than it was just a few months ago. It reflects changes that went into effect earlier this year, and if you have not checked your payment recently, there is a real chance you do not know exactly what you are receiving or whether you are receiving everything you are actually entitled to. Today, every number gets laid out clearly and completely. The exact dollar amounts, the confirmed increases, the programs most seniors overlook, and the steps you need to take right now to make sure not a single dollar of your retirement income is being left behind. This is not general financial advice. These are the confirmed government figures for April 2026, explained in plain language, exactly the way you deserve to receive them. The April 28th payment date is confirmed. The Government of Canada has officially confirmed that the next round of Canada Pension Plan and Old Age Security payments will be issued on April 28, 2026. That is the scheduled date for this payment cycle, and it appears on the official Government of Canada benefits payment calendar. If you are enrolled in direct deposit, your money should be available in your bank account on that date, typically early in the morning. If you receive your payments by cheque in the mail, allow 2 to 3 additional business days for Canada Post delivery. If by May 1st your payment has not arrived and there is no explanation for the delay, contact Service Canada directly at 1-800-277-9914. Delays beyond 2 to 3 business days after the payment date are unusual and worth following up on promptly. The CPP increase for 2026, what it means in real dollars. Your Canada Pension Plan benefit received its annual cost of living adjustment at the start of this year. The Government of Canada confirmed that CPP benefits were increased by 2.0% for 2026. That adjustment took effect in January and has been reflected in every CPP payment since then. The April 28th deposit already includes this full 2026 adjustment. Let us put that 2.0% increase into concrete dollar figures, because percentages do not always feel meaningful until you see them in real terms. If your CPP retirement pension was $700 per month at the end of 2025, a 2.0% increase adds $14 per month, bringing it to $714. Over a full year, that is $168 more in your pocket. If your CPP was closer to $900 per month, you are looking at an $18 monthly increase, or $216 across the year. If you are receiving only $100 per month, the increase adds $22 per month, or $264 annually. The percentage is the same for everyone. The dollar amount grows in proportion to what you are already receiving. The maximum monthly CPP retirement pension for a new recipient starting at age 65 in January 2026 is $1,176.50 per month. That figure reflects both the standard annual inflation adjustment and the ongoing CPP enhancement that has been phasing in since 2019. For existing recipients already in payment before January 2026, your benefit was increased by the confirmed 2.0% inflation adjustment applied to your personal monthly amount as of December 2025. It is important to understand that the vast majority of Canadians receiving CPP do not receive anywhere near the maximum. The amount you personally receive is based on 2 factors: how much you contributed to CPP during your working years, and for how many years you made those contributions at or near the annual maximum level. If you worked full-time for decades and consistently earned near or above the maximum pensionable earnings threshold, your payment will be higher. If you had years of part-time work, periods of unemployment, time spent in caregiving roles outside the paid workforce, or years of lower income, your payment will reflect that. This is not an error. CPP is a contributory program, and it mirrors what was put in over a lifetime of work. For 2026, the year's maximum pensionable earnings, the income ceiling on which standard CPP contributions are calculated, is $74,600. The second earnings ceiling introduced through the CPP enhancement, known as the year's additional maximum pensionable earnings, is $85,000 for 2026. This second tier affects current workers who earn above the standard ceiling and is building toward higher CPP benefits for those contributors when they eventually retire. If you are already retired and receiving CPP, this detail is less directly relevant to your current payment, but it matters for younger family members still planning for retirement. The OAS amounts for April to June 2026 confirmed. The April 28th payment includes old age security as well, and the figures for the April to June 2026 quarter have been officially confirmed. The maximum monthly OAS pension for seniors aged 65 to 74 is $743.05 per month. For seniors aged 75 and older, the maximum is $817.36 per month. These amounts reflect the quarterly adjustment that takes effect with the April payment. OAS benefits increased by 0.1% for the April to June 2026 quarter, and over the past 12 months from April 2025 to April 2026, OAS has increased by a total of 2.1%. For seniors who are 75 years of age and older, the higher OAS rate of $817.36 reflects the permanent 10% increase that was introduced in July 2022 specifically for that age group. If you turned 75 at any point after July 2022, you were automatically moved to the higher rate the month following your birthday. No application was required for that increase, and no application is required to receive the quarterly inflation adjustment. It happens automatically. There is also a critical protection built into the OAS legislation that every recipient should know. OAS and GIS payment amounts are reviewed every 3 months, in January, April, July, and October, and they are adjusted upward when the consumer price index rises. Critically, they will never be reduced even if inflation decreases. That downward protection is written into the legislation, and it is one of the most important financial safeguards for Canadian seniors living on fixed incomes. The Guaranteed Income Supplement. The program. Too many seniors are missing. If you are a lower-income senior and you are not fully informed about the Guaranteed Income Supplement, this section may be the most financially significant part of this entire discussion. The GIS is a non-taxable monthly benefit paid on top of your old age security pension to lower-income seniors. It does not come from CPP contributions. It is funded through general government revenues and is means-tested, meaning the amount you receive depends on your income from the previous tax year. To receive GIS, you must already be receiving OAS. You must be 65 or older, you must live in Canada, and your income must fall below the annual threshold for your marital situation. For the April to June 2026 quarter, the confirmed maximum monthly GIS for a single senior, a widowed senior, or a divorced senior is $1,185 per month. When you combine OAS and GIS at April 2026 rates, a low-income single senior receiving the full OAS of $743.05 plus the maximum GIS of $1,985 would be collecting a combined monthly amount of approximately $2,128 from OAS and GIS alone, before any CPP they may also be entitled to. That is over $32,000 per year in income, and the GIS portion of that is entirely non-taxable. For seniors who qualify, this is not a minor supplement. It is the foundation of their financial survival. The allowance program is also worth knowing about if you are between the ages of 60 and 64 and are the spouse or common law partner of a GIS recipient. For the April to June 2026 quarter, the maximum monthly allowance is $1,211.30. For seniors between 60 and 64 who are surviving spouses or common law partners and have not yet reached OAS eligibility age, the allowance for the survivor has a maximum of $1,682.15 per month for this same period. These programs are not widely discussed, but for those who qualify, they can provide vital income support during the years before OAS eligibility begins. The filing deadline. That directly controls your GIS here is the connection that every GIS recipient must understand clearly, because missing this link costs seniors thousands of dollars every single year. Every July, Service Canada recalculates GIS eligibility and benefit amounts based on your previous year's tax return. The April 30th, 2026 income tax filing deadline, just 2 days after the April 28th payment date, is directly tied to your GIS payments starting in July 2026. If you do not file your 2025 income tax return by April 30th, 2026, your GIS payments could be suspended beginning July 2026, not reduced, suspended entirely. For a senior receiving the maximum GIS, that is approximately $1,185 per month disappearing without warning. Retroactive GIS is only available for up to 11 months of back payments. Any gap longer than that represents income that is permanently and irreversibly lost. This is not a penalty. It is simply how the program functions. GIS is income tested, and without a filed tax return, the government has no way to determine how much you should receive. Filing on time every year is one of the simplest and most financially important steps any GIS recipient can take. For seniors who are unsure how to file or who feel overwhelmed by the process, the CRA's Community Volunteer Income Tax Program offers free tax preparation assistance to eligible individuals, including seniors with modest incomes. Community centers, libraries, and local senior organizations across Canada participate every year. Call 1-800-277-9914 or visit canada.ca to find a free tax clinic near you. There is no reason to let the deadline pass when this support exists specifically for you. The OAS Clawback. What higher income seniors need to know. The OAS Clawback, formerly called the OAS Recovery Tax, reduces your OAS pension if your net world income exceeds a certain threshold. For 2026, the OAS repayment range begins at $93,454. For seniors aged 65 to 74, OAS is fully repaid when income reaches $150,753. For seniors aged 75 and over, the upper threshold is $160,147. For every dollar of net income above the minimum threshold, 15 cents of OAS is recovered through your income tax return. This affects a relatively small percentage of Canadian seniors, those with significant income from investments, private pensions, or continued employment. But if your income is approaching or above the lower threshold, working with a tax professional or financial advisor before the April 30th filing deadline is worth the effort. Strategies such as pension income splitting with a spouse, RRSP, or RRIF timing decisions, and charitable donations can reduce the net income figure the clawback is applied against. Acting before the deadline still leaves options. Acting after it does not. The CPP enhancement and what it means going forward. The CPP enhancement was introduced in 2019 and has been phasing in over several years. Its purpose is to gradually increase the CPP benefits that today's workers will receive in retirement. Phase 1 ran from 2019 to 2023 and increased contribution rates and the pensionable earnings ceiling. Phase 2, which runs through 2025 and 2026, introduces the second earnings ceiling currently set at $85,000. Workers earning above $74,600 and up to $85,000 are now making additional CPP2 contributions at a rate of 4% on those earnings, building toward a higher benefit in retirement. If you are currently retired and receiving CPP, the enhancement does not retroactively increase your existing payment beyond the standard annual inflation adjustment. However, if you contributed during any of the enhancement years between 2019 and your retirement date, you may have a small enhancement component already included in your benefit. For those still working part-time or in any employment while receiving CPP retirement income, continued contributions may be generating a post-retirement benefit, a separate add-on to your CPP that gets applied each January following a year of contribution. It is worth checking your My Service Canada account to see if any post-retirement benefit amounts have been added to your file. The CPP start date decision, what the numbers actually say. If you are approaching 60 or are somewhere in your early to mid-60s and have not yet initiated your CPP, this decision is one of the most financially significant you will make in your retirement years. The numbers are straightforward, even if the right answer depends on your personal situation. You can begin CPP as early as age 60. However, if you start before your 65th birthday, your monthly benefit is permanently reduced by 0.6% for every month you collect before 65. Starting at exactly age 60 means collecting 60 months early, which results in a permanent 36% reduction to your benefit. Conversely, if you delay past age 65, your benefit increases by 0.7% for every month you wait, up to a maximum at age 70. Waiting until 70 instead of starting at 65 results in a 42% higher monthly benefit for the rest of your life. The break-even point between starting at 65 versus waiting to 70 is typically somewhere in the early 80s. If you live beyond that age, the delayed start results in significantly more total lifetime income. This decision must be made based on your own health, your other sources of income, your financial needs right now, and your honest assessment of your longevity. There is no universally correct answer. But it is a decision that benefits enormously from having accurate, current information, which is exactly why these facts matter. Making sure your payment actually reaches you. The vast majority of CPP and OAS recipients in Canada receive their payments by direct deposit. If you are enrolled and your banking information is current, your April 28th payment will arrive with no action required from you. If your banking information has changed due to switching banks, closing an account, or opening a new one, you need to update your direct deposit details with Service Canada as soon as possible to avoid a missed or delayed payment. You can update your information through your My Service Canada account online by calling 1-800-277-9914 or by visiting a Service Canada Centre in person. If you are still receiving payments by cheque in the mail, switching to direct deposit is the simplest way to ensure your money arrives reliably and on time every single month. It is free to set up, it is secure, and Service Canada processes it quickly once the request is submitted. For seniors receiving a combination of CPP, OAS, and private pension income, it is also worth considering income tax withholding. Both CPP and OAS are taxable income. GIS is not. If you have not requested any tax withholding from your monthly CPP or OAS payments, and your combined income from all sources is meaningful, you may find yourself with a balance owing at tax time each April. Service Canada allows you to voluntarily request income tax be withheld directly from your CPP or OAS payments throughout the year. This smooths out your tax obligations and prevents an unexpected bill the following April. You can arrange this through your My Service Canada account or by speaking with a Service Canada agent. If you have never applied for GIS, check now. If you have never applied for GIS and you believe your income may qualify you, do not delay. Service Canada does proactively enroll many low-income seniors automatically when their tax information clearly shows eligibility. But this does not happen for everyone. If you have never applied and you are not certain whether you are enrolled, the safest step is to check your My Service Canada account or call Service Canada directly. A missed GIS application means missed money. While Service Canada can pay back up to 11 months of retroactive GIS payments in some circumstances, there is no full retroactive recovery for years of missed entitlement. The sooner you check, the better. If you are not yet 65 but are approaching that milestone, the recommendation is to apply for OAS approximately 6 months before your 65th birthday. In many cases, Service Canada will send an automatic enrollment letter before you turn 64, but not always. If you have not received that letter by the time you are 64 and a few months old, take the initiative to apply directly. Early application ensures there is no gap in your payments once you become eligible. The full picture of what April 28th represents. The April 28th payment reflects a 2.0% CPP inflation adjustment effective since January 2026. It reflects a 0.1% OAS quarterly increase, bringing the April to June 2026 rates to $743.05 for seniors aged 65 to 74 and $817.36 for seniors aged 75 and older. It reflects continued GIS support for lower-income seniors with confirmed maximum amounts of up to $1,785 for eligible single recipients. And it reflects the full ongoing protection that prevents any downward adjustment to benefit amounts regardless of how inflation moves going forward. Every one of these programs, CPP, OAS, GIS, the allowance for the survivor, represents a commitment made by the Canadian government to its older citizens. They exist because Canadians contributed, paid taxes, and built a system designed to provide dignity and stability in retirement. You have every right to understand these programs fully, claim them completely, and ensure that every dollar you are entitled to is actually making its way to you each month. If something covered here raises a question specific to your personal situation, whether you are wondering why your CPP differs from what a friend receives, whether you have never fully investigated whether GIS applies to you, or whether you are unsure whether delaying OAS makes sense given your circumstances, write that question in the comments. Every comment is read and responses are given. This community of Canadian seniors deserves honest, thoughtful answers to real questions, and that is exactly what this space is committed to providing. If today's information gave you clarity or helped you feel more prepared, please pass it along to someone else in your life who might benefit. a neighbor, a sibling, a friend who worries about their retirement income. So much financial stress among seniors comes not from the money itself, but from not having access to clear and accurate information. Sharing what you know is one of the most meaningful things you can do. And if you want to stay current as Service Canada announces the July 2026 OAS and GIS rates, as new payment dates are confirmed, and as any policy changes emerge that could affect your benefits, make sure you are subscribed. Canadian seniors should always be among the first to know when something that affects their income changes. Your April 28th payment is confirmed. Your increase is real, and you deserve to receive it fully informed. Smart Pension Canada.